The IPOs of LinkedIn, Yandex, and Brennan have many investors asking, are we back in that 90s tech bubble environment again? Well, Terry Schallich's firm co-managed two of the deals, Yandex and Brennan. He's head of equity capital markets at Pacific Crest, investment bank that focuses solely on the tech sector. And he joins us from Portland, Oregon. And I understand, Terry, your team in particular was a managing underwriter for Mail.ru and Warner Brothers Group, Alibaba, Orbitz. You've been in this business. You've seen so many of these deals come to market. Is it different this time?
Thank you, Margaret. Good morning. Yes, I think it is different this time when we look at, particularly when we compare and contrast to, the bubble period of 1999, 2000, in which these companies that are coming public in the current class that opened, January 1st of 2010, are being valued off of financial metrics and not non-financial metrics like eyeballs or session time and that sort of thing.
Right. Well, explain that, because that's often the point that people sort of catch their toe on, to say, well, we haven't really seen necessarily profits at some of these companies. When you are valuing a firm like a Yandex or any one of the other firms that you've looked at, how do you do that? Is it just a multiple of revenue, or do you look at the secondary markets at all to see how they're valuing a company?
Well, we absolutely do look at a public peer group when we take a look at bringing a new issue to the market. But things to remember when you talk about the current new issues market in technology is one, as we all know, trading multiples on public companies, expand and contract depending on where we are in a market cycle and that market's maturity. Two, what investors really like is rapid growth and large opportunity. And when you're talking about, new issues, particularly those out of BRIC countries, you are seeing growth rates that are, 2 or more times that of the incumbents in the U.S., and the market opportunities are extremely large. If we think consumer-facing internet in China, to state some of the statistics that are out there, obviously you're talking about a market where there are 450 to 500 million internet users already, and that is already larger than the total population of North America. And you've still got 1.2 billion in total population in China. So we see that in India and other countries.
But it's a 1.2 billion or more, but not necessarily with access to a computer.
Not yet, but if we focus on China as the example, that 450 million to 500 million users was estimated at 350 to 400 million users just a year or 18 months ago. So quickly we're seeing expansion of that user base. The other theme we're focused on here is it's not just access to the internet by computers anymore. Mobility is a big catalyst to drive the rest of the world online. In the U.S., mobility is largely around creating the always connected consumer. But when you talk about Latin America, China, India, even Russia, we're looking at mobility as the fundamental connection point for the consumer to the internet.
So when you were making the point that this is not the same thing all over again, it's not the 90s all over again, your point was that the metrics aren't just eyeballs or possible volume of users, it was actual money being made, actual earnings.
That's right. Well, yeah, it's earnings, or whether that's net income, EBITDA. We're also looking at revenue multiples. And we're adjusting for growth. I mean, again, the companies that we're seeing come public in the main in this current market are growing 2 to 3 times faster than their long-standing public peers. So you have to growth adjust the earnings, or the multiples apply to those earnings.
Well, with the LinkedIn IPO, and yes, I know only about 8 million shares in terms of the float and the like, but the initial reaction when the market bidded up so high on that first day of trading was that, oh my gosh, this was undervalued. Oh my gosh, there was money left on the table. Do you think those questions are fair?
I think that those questions, are in fact fair. Given the current robust nature of the IPO market, it's always hard to get precisely the right value around around stocks, whether you're an investor or or a banker. And it's a marketplace. There are buyers and sellers for shares at any given moment. I think when we think about sort of the new issues that are coming to market now, you're looking at folks who, in the main have an opportunity to be a dominant market, have a dominant market leadership. And while entry value is always important, I think in this sort of market where investors are really focused is on exit values, and they're focused on those exit values, 18, 24, 36 months down the road.
All right. Terry, thanks so much for making time. I appreciate it.
You're welcome, Margaret. Good to talk to you.
Good.